What's good, everybody? It's Z with the mask, and today I'm making a quick video about the New York AM macro and how I used it this Friday to catch a 1-to-4 risk-to-reward ratio trade on NAS 100 on the 1-minute time frame. This is a trade that took maybe 20 minutes to play out here. It took 15 minutes roughly to play out, which is a ridiculously quick trade. I'm going to explain exactly why I took this trade, what gave me the confidence to take this trade, all the signals that I got from the market, and how you can repeat this on Monday or any other day that might be coming up. So we're currently still going through daylight savings time, which means here, even though usually my New York session is around 2 p.m., it's showing 1 p.m. because the time hasn't quite changed in the States yet. But imagine this to be 2:30 p.m. instead of 1:30 p.m. This is a solid New York high. As you can see, the market did not want to go above it. After here at 14:30, which remind you, after the time conversion because of daylight savings time is 15:30, that's 3:30, which in New York is the 8:30 a.m. or the 9:30 a.m. stock open, the New York Stock Exchange open. Huge boost in volume. We took out those previous highs, right? We didn't get a sweep here like I would usually be looking for, but we created another really major higher high here. And then in the AM macro, which if you don't know what the AM macro is it goes from 3:50 p.m. UTC +1 to 16:10 p.m. It's a 20-minute range. And macros usually happen anywhere at any hour, 10 minutes before it closes and 10 minutes after the hour opens. So that 20-minute range applies to every hour candle, or I guess every 2-hour candles. And it usually can give you some really, really nice clean entries like it did here. Now, what you see here is we have the highs from the New York Stock Exchange open. Once we hit the AM macro, we took out those highs, but immediately reversed. On the reversal, we then have a structure change right here when this massive candle closes below the previous low right here. This signifies a change of the structure of the market. Here, we then kept crashing down, and I'm guessing had news here as this is a clean hourly candle that just got really messy, took out other lows, went back up right here into the fair value gap that was created by taking out this lower low or this higher low here. In this change of market structure, we created this really nice fair value gap. Market came back up into it, and this is where I entered my position. Once I saw this move right here, I set a limit order to the start of the fair value gap here with a stop loss above the candle right here. It could alternatively have been above that candle there or above the high up here. All of which are fine, but I like to have my high risk, high reward trades. So it was a 1-to-4 in this case, targeting the previous lows here. Now, the reason I did not target these lows here was because it's a news candle. News candles don't always give you accurate information as to what the market wants to do. This wick right here is not nearly as likely to be hit again as this wick here. And that's for two reasons. Again, news candles aren't always a good sign. They aren't always a good magnet. But I think more importantly, this right here was the start of the New York Stock Exchange open, which is a huge influx of volume. And that massive influx of volume means one very important thing. Because this immediate shift to the upside happened, there's a lot of people waiting down here that want to get into the market that didn't get a chance because the market didn't drop any further to let them in. There's a lot of people here that want to get in. And because of that, this is a much stronger target because it's the New York Stock Exchange open. That can always be a very, very strong target because especially if it leaves people behind like this, they're all going to be sitting down here waiting, which means that eventually the market came back down to exactly that level to show you, and then basically immediately just reversed back up. Like I said, lots of people waiting right here, and then this little area down here, let them all get into the market, and the market immediately just blasted up to the upside. But yes, this system, if you want to call it that, it's not a full system in and of itself, but this trade using parts of my system is incredibly simple. All you're looking for is a high, and then during the AM macro time, During that time, you're looking for the high to be taken out and a fair value gap to form. Now, this setup is not going to happen every day. It might not even happen every week. You might only get it 2 or 3 times a month. But if you do get it, it's an incredibly high quality, high likelihood setup that you should always take if you have learned to spot it correctly. That's about all I have for you for this video, and I'll see you in the next one.